Thank you, Sandy, for being here with us today. For all of you that do not know Sandy, Sandy Chaikin is the co-founder of Jaqen Analytics, a groundbreaking stock research and analysts platform. With no prior experience, Sandy started investing in 2012 with Jaqen Analytics and built a killer portfolio that continues to outperform the S&P 500 and most money managers. Sandy is living proof that you don't need to be a financial expert to pick winning stocks. Thousands of investors attend her industry events and webinars on fearless investing by following the Jaqen method. NASDAQ.com, Daily Worth, and Elevate all feature Sandy's investing articles and analysis. Sandy was named the honorary chairwoman of Benzinga's first Women's Wealth Forum in March 21st, 2018 in Boston. Sandy, you have the mic.
Oh, thank you so very much. And thank you all for attending today's session on how you can become a fearless investor. First, a brief disclaimer. Jaqen Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. SEC or with any state securities regulatory authority. Jaqen is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. User bears sole responsibility for their own investment research and decisions. Okay, so got that over with. Now, what's going on today? Well, we were intraday over 1,000 points down, closing just shy of it, but another wild day in the market, right? Many people see this as a problem. We typically see this type of volatility as an opportunity, and I think Amelia was saying the same thing on her presentation just prior to mine. However, this time is a little bit different because from our perspective, we are saying there are so many things we don't know about this virus and how people are going to respond to it and how the country is going to respond and manage it, that it puts it into a whole different category. So what we're saying right now is, yes, there is a tremendous amount of volatility. Bear with it. It will end. And when things get back to normal again, you want to have a shopping list of stocks that you want to invest back into. And that's basically what I'm going to be talking about today, is how do you build that shopping list of stocks? How do you get ready so that when things normalize, kind of the green light is on for getting back into the market, you'll feel confident about investing in these particular stocks. So right now, the SPY, as we all know, has gone through this major correction, almost a 13% correction in the last few weeks. And that was predicated by 6% pullbacks in May, August, and September of 2019. Pullbacks are normal, and on any other time up to 2 weeks ago, we would have said, you know, this is normal, this happens all the time, and it will recover in a month, which is typically what has happened. However, we're talking a little bit different language here now. And so that's why I'm putting up this chart here to also say, yes, we have had other 10% corrections. Over the last 7 years, for instance, we've had not 7 years, since the bull market started in 2019, in 2009, so over the last 11 years, we've had 7 instances of over 10% pullbacks. And in all cases, as you can see here from these, you know, dips way at the bottom, they take on a W pattern as they recover. You know, look back on any of them. You know, they don't go straight up and stay up. They go up, they pull back, they go up, they pull back, and they do this, what I call a zigzag pattern. Mark Jaqen, my husband, and the market experts all call it a W pattern. Nevertheless, this is what our analysts, Mark and Dan Russo, our chief market strategists, are anticipating is going to be happening now in this recovery, that it will not go straight up as it did yesterday, for instance, a big day, but we will experience this W. So the key is to be ready for when we're through with that W, that zigzagging pattern, and as I said, the all clear sound is basically called. So these are the type of stocks I'm going to show you how to get into. And this is year 1 year performance as of today, as of this morning. So you can see there are still stocks that are significantly outperforming the SPY, which is up on an annual basis 8.3% as of this morning. And these are stocks, these 5 stocks are stocks that I'm in or have recently been in. And I'm going to show you how I found them and how I knew when to buy them and how I knew when to sell them. So why should you listen to me over the next hour or so? Well, I did start investing in stocks in 2012. Prior to that, I was in mutual funds and worked with a financial advisor. When I say worked with, I mean I turned the whole thing over to him because I didn't have a clue, and said, look, you manage this. I'm not confident that I know enough about stocks to know what I'm doing. That took a big dive. That cost me a lot of money because in 2009, in the big financial crisis, my portfolio lost over 50% value. And this was devastating to me because I had worked years to build that 401k plan up, and I had sacrificed quite a bit in terms of fun things I would have rather been doing than putting that money aside. But it taught me a great lesson, and that is that you really have to take control of your own financial future. And I think this is particularly important for women, because women have 9 out of 10 women are going to be the sole financial advisor, decision maker at some point in your life. So think about that, ladies. 9 out of 10 of us are going to be the sole financial decision maker at some time in our lives. So it's important that we know how to manage our money, or at least be knowledgeable enough about it to be able to have a conversation with a wealth manager. So all that being said, I started investing in stocks in 2012 once we had built this system, which really came out of that dire situation in 2009. And since I've been investing, I have been beating the S&P every year. And now my role is to teach other investors like you on how to find the winning stocks and how to avoid losers and how to time your entries and exits. So as was said in the intro, I'm living proof you really don't have to be a financial expert to be able to manage your portfolio in a way that I have been able to quote, manage mine. And by the way, I spend 15 minutes a day on this, a little bit longer now in these last couple of weeks, in monitoring it much more closely. But in general, I'm able to manage my portfolio of 10 to 15 stocks in 15 minutes a day. So you're about to discover how to take control of your financial future and find winning stocks so you can have peace of mind and gain confidence. And I'm a big believer that confidence is at the bedrock of good investment decision making, because if you don't have confidence in what you're doing and in the decisions you're making, you're either not going to make a decision at all, or you tend to make a bad decision. So all this is about showing you how to become fearless investors versus fearful, so that you embrace the volatility and not be fearful of it. And as I said, after losing it's really over 50% in 2009, I was resolved to take control of my financial future. And that was when Mark and I were just getting together. My husband, Mark Jaqen, who'd been on Wall Street for 30, 40 some years. And he basically came out of retirement. He said, I'm going to come out of retirement to start a company where I can give individuals like you, Sandy, the same professional grade tools that the institutions had for whom I was creating indicators all of my career. So that's really the genesis of Jaqen Analytics. A big downfall in 2009, many individuals like myself suffering, deciding to go it alone, and open self-managed accounts like I did at Vanguard, but we didn't have the knowledge of the tools. So that's where Mark swooped in and said, okay, let's do this. Let's build this company. And that's what we did. So that is what I've been using, and it's been able to help me enormously, as many of our members who take advantage of it now. So again, back to the whole confidence theme. We get many testimonials. One here says, Sandy affirmed that I know more than I think I do about how to use the tools, and because she's using them successfully with a similar novice background to mine, then I can too. It was a real confidence booster. So that's the takeaway here. I can too. And I really want to embed that thought in each and every one of you. So there's 5 steps that we're going to be talking about every day. We're going to go through one by one. And let's start with step number 1, tools you can trust. All right, in order to trade with confidence, invest with confidence, you have to know that you can depend on the tools you're depending on, right? That makes sense. So as what Mark did, first thing in starting Jaqen Analytics, he said, I'm going to build a model that looks at the potential of a stock to out or underperform the market over the next 3 to 6 months. And that's what we call the Jaqen Power Gauge rating. It looks very simple here, right? It's a very simple red-green display, but it's not simplistic. And what it does is it takes 20 factors. It's quantitative and technical factors, tested from 200 factors, whittled down to the 20 that Mark found were most predictive in evaluating where a stock is headed. And as you can see, it's very simple. It gives you a quick, confident read on any stock. I think of it as a GPS for stocks. It tells you where that stock is headed. And it takes the complexity out of and the analysis out of the equation. I think we all can get so bogged down with information now, particularly with 24/7 news and financial channels and emails and texts and everything kind of bombarding you all day long. It's really hard to know what to look at and what's important. And when every time that I ask our attendees from my presentations, what's your biggest challenge today? Information overload is always in the top 2 or 3. Timing is always number 1. When do I get in? When do I get out? But information overload is right up there. And so I've already factored and built the solutions to those challenges into the presentation. But as you can see here, the rating is very simple. It takes all this data, it crunches it, it prints out a red-green display with a red-green display on the 4 basic components that make it up. But in essence, it cuts through the information overload. Here are the 20 factors. They're all weighted differently. But you can get a rating on any one of these 20 factors, as well as the 4 major components, or rolled up all into one, as you can see with Leidos here. It's very bullish. Now, I look at the overall rating. If a stock does not have a bullish or a very bullish rating, I tend to pass it over. I'm a swing trader. I look for stocks to hold. So I want a bullish outlook, obviously. Excuse me 1 minute. I do put particular emphasis on the earnings component. I find that has a high predictive value, as well as our secret sauce, the expert component. And this rolls up the earnings estimates trends, what the short sellers are doing. They're considered the smartest guys on Wall Street. What the insiders are doing. Are they buying the stocks? If they're not buying their own stock, I'm like, why should I be buying it if the insiders aren't buying it? So these are the factors that roll up into this that make up the overall rating. And again, let's go back to emotions and building confidence. Why should you trust a model over a human being? Well, as is quoted here, models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And that's why it's so great to have an objective model that you can really depend on, because we are humans. We are swayed by our emotions. It's very hard to dial those out of any decision making, but the power gauge rating does that for you. Does it work? Well, yes, in real time and in back testing. So taking a span of 20 years, if you had only invested in stocks that were rated very bullish, your portfolio would be up an average of 16.5% a year. If, on the other hand, you only invested in very bearish stocks, you'd be down almost 3% a year. So I say, and when we get to the charts, you'll see this, you can do your own back testing by looking at the power gauge rating over the past year on any stock you look at and determine for yourself whether it's reliable or not. It is used by hedge funds, by pros like Jim Cramer, John Najarian, used by institutional investors. We're quoted pretty much every week in CNBC. We've been written about in Barron's. Most importantly, we've got a very solid, loyal member base who believe in us and have made a lot of money using our technique. Jim Cramer is a big fan of Mark's. I want to explain why I love Mark Chaikin's stuff. It's simple, understandable, rational, not emotional, and I use it constantly, and I almost never want to go against it. So you'll hear Jim speaking a lot about Mark's indicator, the Jaqen money flow, when he talks on Mad Money every day. All right, let's move on to what to buy. If you all can just give me kind of a heads up, give me a yes if you're on board with understanding what I'm saying, if I'm clear. The Jaqen power gauge rating is the centerpiece of what I'm going to be showing you from here on. So if you could just put into your chat window if it's clear. And if my colleagues who are monitoring this can just give me a shout out whether we're seeing yeses or not, that would be great.
Yeah, a few people have responded yes so far.
Okay, great, thank you. All righty, so let's keep going on. What to buy? Classic bulls. We have a basic criteria, 4-point criteria of what to look for when you're looking for a classic bull. Let's go through that with each indicator on the chart that you're seeing here. Semantic. This is what we call a classic bull. The trend has been trending up even in this market. It's still trending up, which is pretty remarkable. This is a 200-day moving average, this orange bar. But what we do is we start at the bottom. So if you look at the bottom, and you'll see the Jaqen power gauge rating, and you'll see it's mostly green. That means the power gauge rating has been green for like the last 6 months or so, bullish. So that's the most important thing to look at. Remember, that rolls up 20 factors. Each of these other really account for one factor. So you want to start with the power gauge rating. Above that, you'll see relative strength. How strong is this stock against the SPY? Because if you're not outperforming the SPY, you're really better off just investing in the SPY and taking their average, which on average over the last 50 years has always come up at 10% a year. That's not bad. But if you want to find stocks like Leidos and Microsoft and those, big winners that I showed you in the beginning, this is what you're going to be looking for. All right, so outperforming. I'm going to skip over overbought, oversold. I'll come back to that later. And this green kind of mountainous area is the Jaqen money flow. This is the indicator which my husband Mark Jaqen created some 40 years ago on Wall Street. And what this does is it monitors institutional money coming in and out of a stock. And the reason this is important is because obviously stocks move not straight up or straight down. It's like an auction. If there are a lot of people bidding on a stock to buy it, or a lot of people selling like they are now, Jaqen money flow will change with that and give you an indication. In this case, semantics, it's still green. Institutions are still buying the stock even on these 1,000-point down days, we're still seeing strong money flow going into this stock. So that I always say follow the money. You know, that's where the money is. And you can see once everything lines up, particularly as money flow kicked in here, look what happened to the price of the stock. It just zoomed up. Even with strong relative strength and strong power gauge rating, once that money flow really kicks in, as it did right before they reported earnings, then you really see the momentum gaining in the stock, and that's happens time and time again with a classic bull. So this is what you want to look for. These little green triangles are buy signals. We have 6 sets of buy signals that are very helpful in saying, hey, you know, there's a lot of momentum in this case going on with the stock. You might want to think about buying this stock right now. Okay, so how do I find those stocks? This takes us to step number 3. You want to screen for the strongest stocks to buy on pullbacks. And this was a screen I did yesterday. We have something that we added a couple of years ago that I think has been really groundbreaking, and that is the screener. And that is you can take factors and plug them in to this algorithm here. Say, I only want to see stocks, in this case, my universe is the SPY. I only want to see stocks that are rated bullish or very bullish, and I want them to have that classic bull component of strong money flow and relative strength, which you can see at the bottom. I want them to be above a rising trend line, and those components and factors within the power gauge rating I want to call out and make sure those are bullish as well. So you can see here I started a universe. Well, we rate 5,000 stocks. By choosing the SPY, I obviously got it down to 500, but now I'm down to 6 stocks, and I literally can do this in seconds. I save this screen. I actually look at this screen every day and actually get it emailed to me every day. I've circled Regeneron and Vertex. These are 2 stocks that have been on the screener for quite some time. I own Adobe. All of these stocks, these 6 stocks, are great stocks to put on your watch list. And when the time is right, go in and buy. Now, these are yesterday's numbers. You know, these percentages are up what they were up yesterday. But still, these are very strong stocks. So let's look at a few of them. Let's look at Vertex. You can see here, it's a classic bull. It's been a classic bull since pretty much mid-October when everything turned green. I mean, it's very color sensitive. All you have to know is green is good and red is bad. And when you see all the green lining up again, as we did mid-October, look what happens. The price just chugs right along up there nicely. It obviously had the pullback February 28th, but look, it triggered a buy signal. It said, hey, this stock on February 28th is oversold. What does that mean? That means it's dipping down, okay? That means it's a good time to buy it. If all else adds up, it's a great time to buy the stock because it's pulling back. It's doing that little zigzag down instead of zigzagging up. And to make this a little easier for you, we've added a checklist. So you really don't have to do the calculation yourself. Gee, is this a good time to buy it? What this is telling you right here is Vertex. It's a good time to buy it. Now, I looked at the checklist today, and early has now turned to, I think it says excellent or opportune or something like that. So it is telling you it's a great time to buy this stock. I would say normally, yes, it's a great time to buy this stock today if it weren't for this coronavirus threat impacting us, you know, from, you know, as Amelia was explaining, you know, these event risks can impact our financial financial well-being, even though it has nothing to do with finance. All right, but this is a great stock to put on your watch list. Regeneron also is a great stock to put on your watch list. And I was listening to Samantha Ledoux's presentation as well, and she included Regeneron in her presentation. This has been on a tear. I mean, look at this chart. It's wild, right? it's been on that screener, that daily screener, since October. And back in October, it was what, 280, and now it's at what, 500. So even February 28th, this stock did not have a pullback, had a minor pullback here. But this has really been on a tear. I circled the overbought, oversold. That's the timing indicator. That helps you know when to buy this stock. If it's pulling back down into this 30 range, that means it's a good time. If it's peaking up, that means it's spiking up. You know, you want to wait for that pullback. Again, in the current market environment, this is a little bit, this has to be taken with modification. But this is typically how I read a stock chart like this. Again, great stock to put on your watch list and buy when the time is right. So I think because of this, of the screener, as well as other attributes we have in the platform, we were awarded the best industry research provider by Wealth Management in 2019, which is an honor we're very proud of. Okay, so here's another Sandra who gave us a very nice testimonial. My 401k was up 47% year to date 2017. She wrote this in January of 2018. I couldn't have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this," and here is how it was so empowering. My husband has confidence in my judgment. Thank you, Jaqen. And I feel empowered. Life is good. So again, I always go back to that theme of confidence. You know, it's critical that you have confidence in your judgment. And that way you will feel, with the right tools and the right methodology, you will feel empowered to make good decisions. Okay, so timing. This is the biggest challenge whenever I ask at any presentation I give, what's your biggest challenge? Timing is always it. Number one, by many-fold over what falls into number two, which is usually information overload. Another biggie, but not quite as big as timing. So let's spend a minute here on timing. How do you know when to get in or out? Well, I've alluded to these buy and sell signals that we have within the platform that trigger when certain criteria are met. There's 6 pairs. And I've also alluded to and showed you this overbought, oversold, where you basically want to buy the stock when it's dipping down in this 30 range, and you want to wait for it to spike up before you sell it. How do you know when those signals have triggered? Well, every morning as part of my 15-minute routine, I'll take my watch list. I keep 2 lists. One is my stock list, one is my watch list. These are obviously stocks that I'm watching. I overlay what we call the alerts view on this, and this is what I get. Every stock in my watch list is evaluated. Did it trigger a buy signal or a sell signal? If yes, then it pulls it right up to the front. It's like an executive summary. The other thing that includes, which are really helpful, are other alerts. If power gauges have gone from, say, neutral to bullish, or if, say, an earnings estimate has changed, it will list that. As you can see here, it's shown them on the downside. It'll show them on the upside. These are, I think of it as an executive summary. It tells me the most important things about a stock list that could affect my decision to buy or sell that stock. So let's look at the XLV, the ETF. We rate ETFs as well as stocks. This is the healthcare ETF. It triggered this buy-sell relative strength breakout. It's saying, hey, relative strength is kicking in on this stock, okay? And you can see down here, it's just going from neutral into positive territory. So what I do is look at, well, what else is going on? Well, it's neutral. A lot of stocks are neutral now, and they tend to trigger the neutral rating when they cross this 200-day moving average, which most stocks, other than those wonderful pharmaceutical stocks, most stocks have fallen on. So it's not really a tick against you. It's just, in today's environment, it's more normal than not. But this is not a stock I would buy right now because I want to wait for that money flow to turn positive. It is dipping down. It's below 30, so it is at a good opportune time. I would just continue to hold this on my watch list right now, but it's a good stock. I mean, we know healthcare was up yesterday, and this reflects it. This is yesterday's chart. And you can see by these arrows here, I have already bought and sold this stock. I bought this stock back in, I think it was late December, or it was early January. I bought it back here at 101, and then I sold it up here at, where did I sell it? At 100. I took a small loss on it, pretty much even, but now it's triggered this relative strength breakout buy. And you can see what was happening when that sell signal was triggered. The money flow had gone kind of neutral to negative, relative strength had gone neutral, power gauge had gone neutral. So you could see the stock was starting to break down. And that gave me the signal as, hey, this is a good time to get out of this stock. How else do I know about those alerts? Well, I can request an email be sent to me every morning before the open. This is Tuesdays because there were quite a few activities on the email on Tuesday as opposed to today or yesterday. So again, I get this screener sent to me every day. That screener I showed you about earlier of a classic bull criteria. Here's the classic bulls on Tuesday. And again, you can see Regeneron and Vertex, which we talked about. Those consistently had been coming up on my screener for a long time. Adobe and DVA, I owned them. So I already own those. And then it tells me any buy sell signals in my stock list. And it was telling me Adobe had a relative strength buy on Tuesday. So again, I get the most important thing, events, in this case, pushed to me. I don't even have to go onto my platform. This is in my email. I see it every morning. And this is a great way to start the day by knowing what's going on in your portfolio, right? All right, let's talk about when to sell. I think that's the hardest part of investing. There's two scenarios. Either you're taking a profit or you're sensing a breakdown, and we'll discuss them independently. So when you're taking a profit, price hits that upper volatility band. This is, certainly above the 200-day average, the orange line, but also we have what we call Jaqen bands. These are volatility bands. Stocks tend to stay within the range of the bands. If they spike up outside the band, that typically signals a really good time to take your profit because it's not likely they're going to stay up there. Price is overbought. Again, it's spiking up, not dipping down, or it spikes up after a strong earnings report. And I'll show you an example that says just that. Again, this is a stock that I owned. I bought this. It's been on the screener, on my watch list. I bought it on January 8th. It had a nice pullback. And you can see here the pullback here. You can see everything else lined up. Power gauge was strong, relative strength was strong. Power gauge was strong, I'm sorry, relative strength strong, and money flow was strong. So everything added up, okay? So I bought the stock. I watched it chug up, pull back, chug up again, and I knew from previous earnings reports that it tend to spike after earnings, right? So I said, I'm going to hold this stock through the earnings because I think they're going to spike up. And they did spike up. And look, it went above that upper volatility band. So that's when you say, thank you very much. I'm going to take my profit and get out of it because it's not likely it's going to stay up there. Look at past spikes. It does not stay up there. To take your profit, I took a 12% profit in 5 weeks, sold it at 69, and now it's 59. So that's how you can control your risk, really, and take your profit and avoid any risk of something happening to your profit. We have something we call a money flow sell alert. And that is this money flow you see has turned red, okay? Money flow turned red back in late January. Everything else was still pretty much green, right? But what's that tell me? That tells me the smart money is selling. That's a really good time to evaluate and say, maybe I should be selling too. If the smart money is selling, maybe I should be selling too. All right, let's go into a breakdown. When I sense, how do you sense that a stock might be breaking down? Well, power gauge can turn neutral, and another indicator like money flow could be negative. Certainly if you get that red triangle, a Chaikin sell signal, or the price dropping below that 200-day moving average, or the long-term, the band. Oh, there it is. Or price drops below the lower volatility band. And let's look at an example of this as well. Okay, this is another ETF, the regional bank ETF. Again, I bought this back in November on a dip. Okay, I always buy on the dips. Here's the dip. It was oversold. Classic bull setup. Everything's green. Chugs along, goes up, but look what happens to money. Money flow starts turning negative in December, and then you get the sell signal. So I obviously sold it, and I sold it at, let's see, I bought it at 56. I think I sold it at 57. So, I mean, I basically got out pretty evenly, but the stock was starting to break down, right? Look what happened shortly thereafter. First money flow, then relative strength. Then the power gauge goes from bullish to neutral. And now the stock's down at 48. So this is why it's so important to anticipate and be able to see these patterns on a chart. And from looking at this chart, now you're probably getting a sense of how to do that yourself. It's your eyes will get used to the flow and the patterns. And before you know it, in 5 seconds, you can look at a chart and know whether it's a stock you're interested in or not. I promise you that will be really easy. All right, I'm going to move on to what to avoid. But let me just ask again, was that helpful? Did the timing section help address your challenge of when to buy and sell? All right, let's move on. Avoiding pitfalls. Classic bear basically has the same components on the reverse side of the classic bull. And let's look at McDonald's as an example. But first, I love to use this quote. The most important thing to do if you find yourself in a hole is to stop digging. In other words, get out. Get out before you incur further loss. And let's look at McDonald's. And again, power gauge turned negative down here and then went to neutral, negative again. Relative strength was pretty weak most of the time. And the smart money started selling back up here. I think that was around June or so. So, and then you do get this sell signal if you weren't already out of the stock. But this is a classic bull, okay? Everything's red instead of green. And the price has paid a toll for that. Again, you look at what the power gauge is telling you. It's telling you the outlook on a stock to out or underperform. In this case, the red is saying, hey, over the next 3 to 6 months, we think the stock is going to underperform the market. Power gauge turning yellow down here, saying, hey, it's going to just go sideways for a while, and it did. Now it's turned red again. So, and money flow is negative, and relative strength is negative. So the outlook on this stock is, guess what? Very negative. Does that make sense? This is what you want to avoid. And when you see these patterns start setting up, this is what you want to anticipate and be out of the stock before it gets worse. So at the beginning of the presentation, I made a promise to you that you would discover how to take control of your financial future and find winning stocks. And that was also, you could be a fearless, confident investor, have peace of mind, gain confidence, and spend more time doing what you want. These are pictures of a trip I took with the women's club I'm a member of in Philadelphia with my sister and some good friends, and we had a ball. And this was, thanks to the profits that I've been making with Jaqen Analytics. So wealth managers use our system as well. And we're actually coming out with something specific to wealth managers any week now. But Craig here says this incredible software has enabled me to make a major difference in our clients' lives. And Craig focuses on women. His clients are primarily women. He's out of Boca Raton, and he's seen amazing results for his clients, which he thanks Jaqen Analytics in large part for. So I've been showing you our platform of how to invest smarter using the repeatable approach to stock and ETF selection, as I've shown you with a 5-step process. I went through these examples very quickly to fit into the time frame, and I see I even have more time left than I realized. But as a Jaqen subscriber, you'll be invited to small group tutorials, which I think are really, really advantageous. And we find that the members who do take advantage of these tutorials fare far better in their investment results than those who don't. But you will be tutored, basically, and shown how to set up the features, how to build your watch list, how to overlay that alerts view so you know what signals have triggered, how to sign up for that email so you'll get your email every day, how to set your screener. All of that will be gone through in your initial small group tutorials, and then it's unlimited. We have sessions every week just for our members on specific topics like options. I mean, there's a whole options overlay. We overlay options play. We didn't even get into that, but we do give sessions on how to use Jaqen and options play to make better options decisions. Things like that. And if you still want more training and you feel that your situation is unique, that you need additional coaching, anyone can schedule a one-on-one coaching session with one of our support team. And this again is unlimited too, as many as you need. Our goal is to make you successful. And I'm going to offer you a free trial on this platform at the end. So please bear with me so you can see the offer and how to sign up for it yourself. It's totally free. Again, going back to Jim Cramer, if you don't use Mark Jaqen's work and Jaqen Analytics before you pull the trigger, well, you're going against 32 years of my work. And Jim has a lot of confidence in Mark, in Jaqen Analytics, and in Jaqen Money Flow. So here's the 14-day free trial that we hope you'll take advantage of. You'll get what we talked about in this sessions, including the power gauge rating on 5,000 stocks and ETFs. You'll get our award-winning research platform, as I've shown you, with all of the indicators, money flow, relative strength, etc. on it. A dedicated team. Again, our success depends on your success, so we are very invested in your success. And you'll get expert insights from Mark. He puts out a market letter every Sunday. He's been preaching a very cautionary tone the last 2 weeks. He was on Benziga this morning on their radio program, again, cautioning investors to basically sit by the sidelines until this coronavirus is dealt with and we have better knowledge of how we're going to contain it. But Dan Russo, our chief market strategist, issues a commentary every morning. So you'll get ongoing support and insights from our experts. So I know I finished up a little early, which is amazing. If there are any questions, happy to take them. And for some reason, I'm not seeing the questions. So if you can call them out to me, that would be really helpful. No questions?
What is the cost after the trial?
The platform retails for $1,795 a year, but we always are running specials for attendees of webinars. So we could work that out with you when you convert to a annual membership.
And for the trial, do they need to start immediately, or can they put that off for a while, for a short time?
You can really start it whenever you want it. That would be up to you.
Okay. Anyone else have any questions?
Okay, well, I guess
I
that
think
wraps it
that's it.
up then. All right.
Yeah.
Well, thank you so much for inviting me to
All right.
participate, and
Thank you.
I
Yeah, that was
thank the audience
great
as
presentation.
well. Okay, great. Thanks. I hope it's helpful.